Welcome, Pat. We have returned.
Hello for another exciting week with Rick. How you doing, buddy? How's everybody out there? Seems like
60, 67 degrees. It's perfect. So,
it's awesome. And it
but
seems like the week goes so quick. It seems like we get together every 2 days.
it
Boy,
has.
it
It has. It's
flies.
been flying up here. I'm heading back on Monday, so I shall return. So I'm just warning all the other states as I drive through them. So you and I now last Friday we were on and we were talking about Fed Day was coming, and I made the remark that, well, every time they get on and they lower rates, we see mortgages go up. And you said, well, that was kind of because there was a little bit of the bond traders kind of telling them they disagree with them last time. And this time you don't see that. And you thought we'd see rates go down. And you were right,
Well,
except for today.
the last day and a half. I think I've been, nobody. I'm not gonna sit there and pat myself on the back saying I'm right, right, because you just try to. We're just trying to give people some decent information to go off of, but really, I've been telling it the last 4 or 5 months that I think September, October. If you look back in our YouTube shows back several months ago, I said September, October. I think we're going to see some movement in rates, positive, which we have. We'll talk more about rates here as we get into it, but I think you were right, and I was right at kind of the same time. What they call that, juxtaposition.
Something like that. Yeah. Yeah. It's a big word. So
Yeah,
I
yeah.
can't type it. But I, um, I want to caution everybody too, because, go to old Facebook, you're seeing, if you see a realtor out there that says rates are down, business is picking up, take it for what it is, because I'm not seeing it yet, Pat. And not that I expect yesterday to pick up sales today, but rates have gone down the past couple weeks. And if I just look at my simple little, hey, there's Stark from last week. Great.
Stark
Glad you
eats
could catch
toad.
it.
I
So
don't Stark.
um, I have this, here once again is my good old 7-day moving average. And you can see that we're getting more new listings coming up. And you can see it in the ticker down below, which reflects, which is feeds this chart. But again, the number of contracts, they're not budging. They're 2,600 something. Our total active listings are up over 24,000 this week. So we got 3,069 new contracts and only 2,599. Not yeah, new contracts 2,599. Listings are about 3,000. So this line is not growing. And my point is that if we were starting to see more people doing quote unquote getting off the fence, that line would start to come up. Now, maybe next week, the week after that, because we're seeing new listings increase by about the gap between new listings and new contracts increased by about 400 per week. So that could get us up to 26,000 pretty quick as we start getting into October, November. Probably hit 27,000, which was at one point considered normal. But I really want to watch that sales number. Is that going? You're going to start getting a lot of refi business coming in here pretty quick if you aren't already. And but I think as far as people purchasing, I'm not seeing the flood that people are going to warn you about. I mean, here's what we're seeing in rates right now. They're at 6.37,
Yeah, and
and
and the other day there, that same 30-year fixed number was about 6.11, 6.12. So a couple days ago.
so it bounces around a little bit. And you were saying earlier that it's the lenders are the banks aren't going to lower the rates yet. They're going to wait for a little stability. Um, I've got here the average list price per square foot, which shows it went up, but that's a seasonal event. That means that more upper end homes that took their homes out the market are back. Um, Pending listings, this is the one that we look at and shake our head every week. We're still to last year. So again, tying it back to my other 7-day moving average, if new buyers were rushing out, coming in, if these lower rates were activating them, it's not showing up in the data.
It's creepy how similar those two lines are.
Yeah, that's really odd. And and I go, I just as strange could be. Here's interesting. This is days of inventory. Kind of went down a little bit to 110 and then creeped up. And I wanted to pull up a number here for us because I think at this stage when we're looking at what's going to happen next. So let's say rates, continue their downward climb, right?
Mm-hmm.
I I don't see any change coming for on pricing to any type of degree, whether it's you know prices higher, prices lower. I don't see that. I don't see what I am seeing is, or what we will see. I think first is a change in sellers contributing to closing costs.
Yeah.
So here we are there. So we're at 53%. I don't think the percentage of sellers contributing to closing costs is going to change, but I think what you're going to see is the average of $10,000 maybe come down a little bit.
Yeah, it might come down from 10 to maybe 5 or 6,000. It's going to come down gradually. Wouldn't you
So,
agree?
yeah, I mean, there's no, they, it, and that's just a matter of more supply going up against tepid demand. No, let me restate that. If demand starts to increase and they close the gap, the sellers won't have to contribute closing costs to the degree they do now. Does that make
Yeah.
sense?
Yep.
So now you were seeing what you are you seeing? You told me yesterday you're actually bumping into some rates that were below six.
Yeah. I mean, obviously it depends. A lot of people don't understand. Once again, I had a couple of people say, well, they did call me like, "What's your interest rate?" Yesterday. Once again, try to avoid. Don't want to. You want to answer that question, but what's your loan to value? What's your credit score? Once again, you have to kind of spend 5 minutes explaining that. We got obviously high fives right now. I mean, this is the 2 day. This is the 2 day activity on the mortgage-backed security 5% coupon. Now, there's different coupons. I mean, there's different buckets. It's a technical, who's buying what. There's a 6% coupon, 5.5% coupon, and now that pretty much since rates have come down, the last year I was using the 6% coupon as kind of a benchmark. Then as rates went down, we went to 5.5. Now we're at 5. There's too many technical things to talk about. I mean, which I don't think I could explain succinctly in 1 minute. But there's different buckets that they buy. The investors. But this is the activity the last 2 days. You saw this is the green spike was when rates got positive, right? But then you saw very quickly how they deteriorated very quickly over the day. So
Yeah.
this was probably the first. I mean, it was 2 o'clock. I mean, let's see here. This was basically after during the news conference with Powell, and then after Powell basically shrugged off the dot plot, and he gave more of a hawkish tone than I think people expected. His reply, some of his, this market was moving based on some of what he said. And a couple of people said it seemed like he was talking in circles, which I'm sure people that listen to me probably think I talk in circles someday too,
I get that.
or the train. But he did sound like the Fed was going to follow through on a couple more cuts. But he just, I don't know. It just feels like he's not too worried about the labor market weakness. I mean, he didn't shut the door, but he said, he goes, this is more of a risk management move. The market definitely didn't like that. So that's where you saw this, this was the trading during the day before then all of a sudden it spiked, rates went lower. These are prices so that rates and prices, move inversely. I always use the price, obviously this right here is the 10-year treasury chart, but I use the price chart. But like you said, you can see very quickly that the bonds deteriorated. They came back down about 20, 25 basis points, depending on, what coupon you're looking at. But as you can see now, today, we kind of stabilized out here a little bit. I mean, whereas basically last September, they for 4 or 5 months, they went through, they kept just climbing and climbing and climbing. But once again, I got to believe that this time frame is a little different. The job reports that we had last September were a lot different than what we're seeing now. So we're going to have these little short term, you know, what I say, shakeout periods. But like I said, I like the fact that the bonds kind of stabilized right in here short term. So, I mean, people are going to be getting calls. Oh, rates are down. Yeah, they've been coming down the last couple of months. So, I mean, if people, they've jumped up a little bit, eighth to a quarter, you could get low high fives, low sixes. Now it's six and a quarter, 6 3/8. But short term, I got to give kudos to Tim, one of our few viewers. I was talking to him earlier this morning, and I said, "Hey, we are talking the same language." He watches the 10-year. He was a trader, and he goes, I totally agree with you. I think things will shake out a little bit further in the next couple months." And what we've got, the trend. They always say the trend is your friend. 2 or 3 years ago, the trend was going up. We've broken that trend. We just have to let the market work its way out. And when you've got the Fed looking to cut further, I think if we have another interesting jobs report, obviously you can see that continued work weakness, which will help the bond market. So I think nobody's got a crystal ball, but certainly it feels to me like mid to high fives would be a nice landing area for people. I know there's people refinancing right now because obviously they're here. I'm sure they're getting calls. They're getting spooked by people saying, "Oh, rates are, you better refinance now because rates are going to start going up again." I just don't buy into spooking people and scaring people like that.
Yeah, I put together based on some Cromford data, a talk about forecasting. But in fact, the link is in the chat. It should be in there somewhere. Let's see if it's showing up.
Hey, Debbie, just want to say Debbie's there.
Yeah. I put together a current market overview, and it basically says, here's our pricing performance. But the gist of it is that they're not seeing anything that's going to pop the rest of the year. So October pricing forecast, this is from Cromford. Our analytical models project the average monthly sales price square foot for October at 285, representing a 0.34 increase from 15 levels, September 15 levels. So they're not predicting anything higher or lower at any great extent. And the projected modest increase aligns with typically seasonal patterns as we move through the traditionally stronger fall selling season. So it gives us some of the seasonal dynamics, 6-month price trends. So something to take a peek at. And like I say, the link is below there. We have a comment here that says, jobs got to be a concern, weaker labor market than expected. Yeah, the jobs, God, who knows even how to believe any of the job numbers that are out there now. But, it's the new listings that we're seeing, they're coming up seasonally right now. They're just coming out of the summer doldrums, but they're not spiking.
Mm-hmm.
And even everything I listen to with the Fed, and the White House, of course, always going to tell you that jobs are going to be great and life is bliss, no matter what party's in there. But the central bank doesn't seem to be too concerned about jobs.
I know, it's just weird. I mean, you see these reports that Intel's laying off, and obviously they had some things with NVIDIA today, but you've got, I don't know, there's just feels like to me that a lot of these, I'm seeing reports of these graduates trying to get a job. It's tough for them to get a job. They're not as plentiful as people they say they are. I think it's a very bifurcated market. People that have got jobs, people that don't have jobs. It just
Well, here's notice of trustee sales by month. They're still down here. Went from 393 to 423, so nothing's spiking up there. I'm looking at listing success rate by month. Actually went from 64% to 68, 69, nothing 68, nothing major. Still pretty low by historical standards. And I think one of the things that sticks out to me is that as you look and get comments about things are going to get a lot worse. I just can't state enough that just how slow the sales numbers are, how low they are historically. Yet um, they're sort of in line with how many new listings are coming on, so there isn't this huge pricing pressure on the downside for the most of the market. There is in Buckeye and Maricopa, but there isn't, this huge gap that's like we saw in past years.
Hmm.
Even though the number of sales is really, really low, I just don't see it getting beaten down much more than it is right now. And there are a lot of people out there in a position to take advantage of the increased inventory, and they're doing that. And people that are listing their homes and pricing it correctly are finding that out as well. In fact, one of the strategic um, things that it said in this report was price competitively based on recent comparable sales, not peak market values. That needs to be shouted from the rooftop, doesn't it?
Yeah. Yep.
Prepare for realistic market times while inventory levels remain elevated. Consider fall selling advantages as buyer activity traditionally increases. Haven't seen it yet, but it could show up. So it's giving you some pure facts there that say, price it right and take advantage if you start to see buyers starting to show up, because they will at the end of this month and in October. But the extent of how they show up, I just don't know.
Yeah. And I love the fact, pure facts. We're all about pure facts, right? Right, Rick?
Yeah, yeah,
Yeah.
yeah.
Pure facts. I like that.
Except for the stuff we make up.
I'm not going to go there, but uh, I think I obviously I think you look back to May. I was looking at these rates. There are 6, 6 and 7, 8, 7 on that Mortgage News Daily. The weekly survey. Sitting at 6.97%. We're sitting at 6.3. Certainly this drop the last since May. The last 4 or 5 months has certainly, I think it's pushed people out. That you got to admit, I'm certain it's getting people out there. It's certainly we're in a lot better environment than we were 5, 6, 7, 8, 10 months ago in terms of pricing power. So I mean, it's certainly got some people probably out there looking like, okay, I can, it's high fives, low sixes, I can handle that. But is it like you said? Is it going to push this swarm of people? There's still that once again that affordability issue.
Yeah. So, and and you and I are on, social media a lot, just looking at stuff. Some of the things make me shake my, you just think, stop,
Yeah,
stop, especially if they're trying to give you some FOMO or sense of urgency.
yeah.
This market does not say you have any sense of emergency that you need.
Hmm.
It's still, go ahead, take your time, take a look and see what's going on. And we got Bebop here saying, have any refinances yet, Pat?
Yeah, I mean, I've got a handful. I mean, I don't want to open up a can of worms. I've been calling people and just letting them know, hey, I'm keeping an eye on rates. I just personally, I just feel that rates, the trend is your friend. I'm not going to try to be some, righteous person, but I really think that if people can hold off, I want to be that the old bull, young bull. I want to walk down and get them all versus run down and get a couple.
Yeah,
And
yeah.
and I could put that in different words, but to be nice. But I've been just trying to prepare people because I said obviously yesterday morning we had a short term. If you locked in a couple of days ago prior to that, yeah, you might have got about a little bit better rate. But yesterday we saw such a herky jerky motion that once again these lenders, they're not going to give you, if bonds do come down, and if the prices come down or rates come down, they're not going to be throwing out their pricing right away because they don't want to be pricing in the morning, give you 5 and 7/8, and then by the afternoon it's 6 and 8. So they just maybe locked in 10 or 15, 20, who knows, millions of dollars. That's 5 and 7/8 when rates spike back up to 6 and 8. So they're always kind of lagging behind their repricing. Now, when the rates go up, they will throw those out like
Yeah, as
I
fast as
mean,
they can.
as fast as they can. But when rates go down, they're a little more cautious as far as that. But to answer your question, I have gotten a few. I mean, I've been basically telling people, hey, let's just hang in there. Let's be patient. Don't get sucked into all the phone calls or the media that, oh my God, rates are going to go back up just like they did September. I think we're in a different time frame. I mean, people are saying that. They don't know. I don't know either, but I feel that with the jobs, the environment looks like rates will definitely be trending, in a more consistent lower pattern the next month or two. If people are patient, I'd rather jump on when I feel like, hey, I feel really good about this. I would like to lock in everybody in the high fives, with no cost. So there's been a handful of people that do, there's some people out there that need to refinance either way. But for the most part, if you don't need to refinance right away, I'm telling people, hey, I try to have your best interest in mind, and let's kind of keep an eye on things and, pull the trigger when you feel, okay, I like this rate.
Well, here's Sid saying I've been looking for a house in Chandler for 6 months. Seems like sellers doing an eBay auction. They throw a crazy number, then slowly keep dropping over 100 days. Don't see much motivation. Some are getting it right, but you're right. I mean, there's just a huge percentage of people just, well, let's see if I can get this. And that's not desperation. Our market isn't, that's not where we're at. Um, so, um, and then Bebop here says, Scottsdale's flooded with condos right now. Any charts to back this up, Rick? Like pricing and inventory levels? Let me take a look at it. If I look at active listings,
Bebop's back in. We haven't seen him for a little while, have we?
yeah. Bebop, you have been absent.
If I can recall,
Yeah.
there's certain names like Debbie, people that pop up.
Let's see. I'm trying to figure out what's going on here.
Running at altitude.
Trying to, yeah, running an altitude. So there's a few of you. We just look at it and go, all right, they're back. Some of you, we go.
One of our many of our millions. How do we pick these people out of our millions of viewers? I don't know.
Millions and millions of viewers. It's staggering. Okay, here's what I'm going to try and take a look at here. See, and I'm going to do it on the fly. So right here, dwelling type. I'm just going to look at number of listings. This won't give me the pricing, but I'm going to look at condos overall. Now I'm seeing them go from seasonal low of 3451 to 3603, but let's take a look and see what's going on in Scottsdale. Is their spike higher than everybody else? And actually it's not. They had 746, now they have 780. It all depends on the neighborhood there too. We're seeing, some people are moving their Airbnbs, but even that's not a flood to the market. So I'm not seeing anything that statistically jumps out at me that's showing things going. It's certainly, when you look at this, the argument could be made that condo listings have really dropped since May. They're at 1,081. Now they're at 780. So the opposite's happening. But when you're seeing signs pop up in your neighborhood and stuff, whereas before we were down here in the 100s, then it's going to seem like there's a lot of condos. So hope that helps. And I said, got it. So I think, the other thing I was looking at too was the contract ratio, and it's not too bad. It's not alarming as well. So my bottom line is, as you're reading the news stuff, pepper what you're seeing nationally, because nationally they're saying refinances are really taking off. Buyers are coming back. Most of that's Midwest, and not Florida, not Texas. Massachusetts doing really well. Seattle is slow. We are slow. The only markets that I'm seeing that are having some real downward pricing pressure are California, Austin, Texas, and Florida. A lot of those are just due to insurance, especially California. So I don't see this rush. So we're going to be the patient ones. Probably going to be the most boring YouTube channel you've ever visited. Well, here we are again, I guess.
Yeah. Boring.
But we want you to keep coming
boring
back.
doesn't get the clicks, but I'll stick with boring. That's fine with me.
I
I
haven't
mean,
had a reason to put a nuclear explosion up on a thumbnail yet.
yeah,
Um,
yeah,
that really brings them in. So it's it's and fire.
yeah.
You know, nuclear
Fire.
explosion, fire. Because if I say something negative, people's like, ah, there it is. I knew it. I knew it was going to get bad. I'm going to go watch this. And then, but if I do that, I better be negative. Otherwise, people are going to accuse me of clickbait. Here is our supply and demand. This is Cromford Supply Index. So this little blue line's going down. That meant supply was coming down, and demand has kind of flatlined and gone up just a hair according to the index. But now the supply line is turning, going the other way. When you see this updated in about 2-3 weeks, that number is going to turn back. So as long as there's a gap here between the supply index and the demand index, there's going to be minimal pressure to on the downside, but there's going to be severe pressure to price correctly. So if you're testing the market, this is going to tell you right here that you're going to fail. So if you're pricing to, well, let's see if we can get this. Don't even bother. Don't bother your realtor. Don't put yourself through the anxiety of showing your home if you're not serious about selling it. If you just want to say, honey, let's see if we can get 700 for it, and it's probably going for 6.25, don't waste your time, because it wastes a lot of people's time. And that's not the market that we're in. Testing is when that gap closes
Mm,
or when it goes the other way, which, we've seen that before. But like right here, when if I look at this, um, the only time that we've seen new listings fall below new contracts is holidays. So, nobody's listening there. This is Memorial Day, 4th of July, Labor Day. That's the only time right there is the
mm,
holidays. And after the holidays, they spring back up. So we're just not seeing that trend where that gap is going either way, to where it favors aggressive pricing. Now, there's no more real big news coming out this week, correct?
no, not this week, but next week we got the PC coming out on Friday. So we've got the PC next Friday, and then basically, I mean, do the rates creep up a little higher? I mean, like you said, you get these people have such a way of dramatizing everything nowadays. You hear that, I saw a couple of mortgage people say, "Oh my God, rates increased dramatically today." I'm like, "Come on, just stop it, please." We can see rates creep higher a little bit, but I don't think we're going to see any significant moves as long as the market believes that we're going to get a couple of cuts. I believe the next event, if I'm not mistaken, is the BLS numbers. October 3rd. We got the PCE coming out next Friday. We got the BLS numbers coming out October 3rd. I believe that's followed by this CPI number that's coming out October 15th. So, you're going to see probably a little floating around here, but at least we don't have the exciting news conference of Jerome Powell coming out for a while. I tell you, that guy just, oh my God, just.
He keeps clearing his throat. Yeah, we have, we're looking at the jobs numbers.
Well, I noticed when I talk, I say and quite a bit. I've been trying to cut down on the knows. Yeah, so I've been very. But we're going to just see, like I said, Powell seemed like he was kind of digging maybe his feet in a little bit. Like I said, the risk management comment that he made. Obviously, the market did not like that. We'll see the market calm down a little bit. We'll probably see rates in this low 6 range, whether it's 6.125, 6.25. Anytime you get a big move, once again, if I quote a rate today at 6.25, and the cost was $1,000, or let's say $500, but rates went up, you can get 6.25, but maybe it's now $1,000 or $1,100 or $1,200. So you got the intraday moves. I said this a couple times the last couple of months, but you get these intraday moves with the cost, but the rate stays the same. So,
well, he also was pretty tepid when it came to GDP growth over not just next year or this year, but the year after. He wouldn't go above 1.8%. There's certainly a lot of reasons why GDP growth could hit 3%.
Yeah. Yeah.
So I mean, there's, anytime you get that amount of tax cuts that generally stimulate, growth, you'll start seeing GDP at least above 2.5. And he's been very pessimistic about stuff. He's trying to tend to hang in there at the
He,
1.5 to 1.6.
I wonder what
And
he, I wonder what he tells himself before he gets in front of, gets in front of the microphone and I'd be crapping my bricks, as far as, because
a
you
guy.
know, the funny thing is you could say like that one word risk management. Um, the market did its thing, and you'd be like, oh, I should have. He probably in the after the comment like, oh, I shouldn't have said that.
Well, since everybody hangs on his word,
Yeah.
he can just say one or two words and people flip out. Whereas Alan Greenspan, he didn't have to worry about it because nobody clearly understood him.
Oh my God, he was drier than the Sahara Desert. I he was crazy to listen to too. But it's amazing. Once again, I just think that we're going to see, the next events will probably be pulling rates down, or I think, yeah, obviously we see some weakness there. So we'll wait and see. It's just, wait. I'm waiting for different targets for people, to refinance.
Here's our expired listings year to date. You can see these are people that put their home on the market and said, "Well, it didn't work. Let's just let it expire." But I'm curious if I filter this out to what I'm going to say is gosh, do we really have anything $150,000 out there? Um,
No.
yeah, and that's the mobile home
Back
crop.
in back
Okay.
in 08, 09, 2010, I could have gotten you a lot of stuff for 150,000.
So I'm going to go and filter this from 400,000 to 800,000, and that's where the majority of the expireds are.
Yeah.
So that's your basic neighborhoods out there saying, "Well, let me give it a shot," and it's not working for them. So that I don't see expireds spiking because I just don't see them getting any higher than where they've been this year. I mean, gosh, we had one month went up to 1,200. We hit 800 this month at the first of the month, and so I don't see that climbing. We'll see a huge spike January 1st in expireds, but it'll be offset by the people that's just because everybody writes a listing contract to expire at the end of the year. So that'll spike up, but it'll be offset by the new listings that come on because everybody's optimistic because it's January and it's new year now. So none of that matters if the sales numbers don't budge. So sound like a broken record there, but that's where I'm at. So
I think we saw like a broken record the last couple of years, but hey, it is what it is. We're trying to report the news as it is.
so so we'll see what happens. I will be on the road next week, Pat, so we won't be having a show here. I will probably about that time be somewhere deep into Utah, I think.
Yeah. Well, that's good that we're not having one because next week I'm going to be in Wisconsin for my cousin's wedding,
Oh, okay.
27th. Gonna
Well, there you
be
go. I guess
eating
I knew
cheese
that.
curds and watching the Packers, but I'll be gone for a couple of days. I
Cheese
saw
curd.
one last note. I just for people that the Federal Reserve. I saw this quick, just popped into my head. The train going through my head. They, there was a note that I saw. You think about the Federal Reserve and the bond market. They said the Fed sets the thermostat, which is short term rates, and the bond market controls the climate, mortgage rates. So basically, once again, people have gotten they think they mix this correlation, which if you're an average person, you don't know. I mean, that's the Federal Reserve cuts and mortgage rates. They do not. They're kind of totally. They kind of move together, but one does not. Could go off the edges like we saw last September, but I think this time it's going to be different. We're in a different time frame. You just have to sit and wait. So glad to
I
see.
got
We'll
this
see.
QR code keeps popping up below, and then there's a link down below to get your own personalized zip code report. So if you've already requested one and you want to see an update, just send me a note and a zip code, and I'll get that right out to you. It's kind of
Yeah,
cool. It gives you your rental data, your foreclosure data, your just everything you need to know. You can, it's a good read right before you go to sleep. So,
Well, I also tell if anybody's got any refinance question, they can reach out. If they're working through somebody else, I'd be more than happy to at least give my 2.5, 3 cents worth. But give them a little bit of my input. You know me. I've gotten people to send me stuff. I say, hey, that's looking great, whatever. So it
yeah.
doesn't trying to help in
All
any way
right.
I can. So all
Well,
right,
have a
man.
good one, my friend. I'll see you in a couple of weeks on here.
Take care.
See ya.
Bye bye.